Höegh makes FSRUs. That's a floating LNG import terminal. So it has a really intimate read on where the flows are going, who's buying, and how much they're buying as quickly these FSRUs can be transported all around the world. Sven, good to see you. Thank you so much for joining us.
Thank you.
So from your perspective, is China buying more or less from the U.S.? How is the trade war impacted?
Well, first of all, keep in mind the market is long supplies. So that means that China can buy its LNG from different sources. Obviously, the US is one of them. I think from what I see from the numbers you see, first quarter this year, total trade is up 12–13%. And China just keeps adding to its imports. And I think the answer to that is, since China can buy from multiple sources, the only losers here are the US exporters.
So you do have FSRUs in China. So do you see US LNG being backed out? And if so, where do you see that US LNG going?
Well, if you take the first part of this year as the example, as you said, we have the only FSRU in the Chinese market. It's chartered to CNOOC. The LNG that went through that facility came from Australia. So as far as I know, there were no US cargoes delivered to that facility. Interestingly enough, Europe is back as a big importer first half of this year. That's new because, as you all know, Europe is mainly pipeline supplied. And a lot of that LNG actually came from the US.
Interesting.
Yeah.
Does that continue? Because a lot of conversation has been made that Russia is trying to really get a lot of its LNG into Europe to kind of back out the U.S. And then where does the U.S. LNG go? Do you feel like we're going to be able to keep exporting to Europe despite the fact that LNG global prices are falling?
Well, I think, first of all, the price is a very important part here. And LNG from the U.S. is very price competitive now. So I think the imports into Europe from the US will only continue. And there's a very strong push from the European Union to diversify its gas supplies, including LNG. So I think there will be a big opportunity here for US exporters to actually sell their LNG in Europe.
And this actually shows sort of a different pricing around the world. There's no one global LNG price. So you have the white line is UK, the yellow line is Asian LNG, and then the blue line is US LNG on a normalized basis, holding up better over the last few months than other LNG. So if you look at that and you take into account how China's buying, where Europe is buying, what's your outlook for demand, and what does that tell us about global growth?
Well, look, if you look beyond the trade war and the gray weather outside, actually the LNG industry is doing very, very well. For the next 4 or 5 years, demand will just continue, and it's going to be driven by the main macro factors, namely that natural gas is replacing coal and oil across the market, and prices will stay competitive. I don't like the word low, it's competitive, and the gas is being produced, the LNG is being exported, and the market will decide what the price is, and that's what you get when you sell. So I think within the next 4 or 5 years, this market will have gone from 320 million tons to close to 500. So a huge increase in demand, most of it in Asia, but also in Europe.
So do you see that continuing? Like, will China be the growth powerhouse that we expect it to be? Will India become that? Where will be the areas of strength?
Well, I mean, China has doubled its imports in 2 years and will continue to do so. So obviously they will be a major actor. They are already the second largest importer. India definitely, because India has a huge appetite for natural gas, as long as it's priced right. So as an example, we will install the first FSRU in China later this year. They will need a number of additional facilities, and there are projects all along the coast of of India. And I think India is a huge potential market also for US exports.